Hello traders and welcome to another video review. Today is Monday, the 8th of March 2021. Let's take a look at the Forex calendar and then we'll do some technical analysis. As you can see, there isn't much going on today on the in the calendar. Some data had been released, of course, during the Tokyo session, like leading indicators and economy watcher survey from Japan, but those data don't have much importance. And that means they don't have much impact on the market. There was a speech from Deputy Governor of Bank of Japan, Masayoshi Amamiya, but nothing interesting from that speech was delivered anyway. There's unemployment rate data released from Switzerland. As you can see, it's in line with the expectations. Industrial production from Germany had been worse than expected. It deteriorates more to the minus territory, to the negative territory, minus 2.5% on monthly basis. There is a Centix investor confidence data scheduled for release at 10:30 from the Eurozone. So that might be interesting to see what is the investor confidence these days. During the New York session, one mentionable data to keep an eye on are wholesale inventories, of course, scheduled for release at 4 o'clock. And deep in the night, quarter to 11 p.m., there's some manufacturing sales data scheduled for release from New Zealand. So that's everything for the Monday. Pretty much quiet day for the beginning of the week. So let's take a look at the majors first. Let's take a look at the euro dollar. Of course, this is our favorite scenario. So far it works very well. As you can see, we are just hit our target, 61% of the last, maybe just zoom out, of the last wave up. This level was located at 1.1885. So it's hit, and now it's very interesting situation because that wave C might be completed, right? Might be completed, and we might see some sort of a bounce here on the euro dollar, especially that, as you can see here on the RSI, we are very close to oversold market condition, of course. So please keep an eye on the euro dollar. If we break lower, however, in a very dynamic fashion, the next stop for the euro dollar is 1.18. Yes, that's the next level. Of course, the indication of the long-term uptrend on the euro, of the long-term change or termination or reversal on the euro dollar is when the level of 1.1630, 1.16 is violated clearly, right? If we take a look, this is daily time frame chart, but if we take a look on the different time frames, we can see like weekly, we can see that there is some sort of kind of a shooting star pattern last week. So very long upper shadow. So please pay attention to the current developments, because this ABC correction might be kind of a tricky. Instead of the ABC, we might have wave 1, wave B would be wave 2, that would be wave 3, wave 4, and wave 5, and then we will have a typical ABC irregular collection to the downside made. So right now I will just remove this ABC, and please remember 1, 2, maybe 3, maybe 4, maybe 5 to the downside. And if it is so, then 1.18, 1.1747 and 1.16 this should go lower. Yes, 1.1613 is the next target for the market. So that's the euro dollar. The other majors is British pound, and the British pound is going down as well. After the burst above this channel, we come back to the channel back on, and the level of 61% had been violated, as you can see. So we are below 61%, which is not a good news for bulls, because that means the bears are working very hard to push the price lower. The next target almost hit. the 1.3758. This is the next target for the bears. As you can see, the momentum is below the 50 level, 47, 46 points, so it confirms the bearish pressure. But please remember, we are still trading inside of this long-term channel on the British pound. So for now, any kind of a move to the downside is still being considered as inside channel move. So that's not that easy for the British pound to reverse. Let's just take a look on the Fibonacci extensions to the downside. Where is 100? There you go. The 100 is around the level of 1.3620, which means at the same time that this is kind of out of the channel anyway. So that would be interesting level, because that would mean this is the wave A. Where is my wave? There you go. This is the wave. This is the wave A, that would be the wave B, and that's the target for the wave C. 1-to-1 is a very popular, very strong target for the corrective wave. So please keep an eye on this level. Let me just make some changes in the lines. This is the technical support, so it's green. Well, all of the lines will now be green anyway, and that's another one, and another one is somewhere around here, just in the middle between 100 and 127, and one more line. I think I will put it on the top of the wave B, but this is 1.4014, and that's of course the technical resistance. So this looks very promising for the bears, but please keep an eye on the line breakout somewhere around, roughly around here. Is that correct? Yes, somewhere around here. Let me just take a look at this channel again. Let's just, there you go. Yes, of course, this is correct. So please keep an eye on this level on the British pound, because we are approaching 1.3620. We should expect some sort of a reversal candle to the upside when we reach this level. USD Japanese Yen. USD Japanese Yen, we are still going up. There is absolutely no pause for the up move. We are in the extremely overbought territory on daily time frame chart. The RSI is 80 right now, so we are going up, not looking back, not looking down, and this looks like a very, very promising V-shaped reversal. And it all started with this trend line breakout in the wave 1, then wave 2, of course, 5 waves up, wave 1 on the main cycle, wave 2 on the main cycle, and now we are developing wave 3. Target is 109.88. That's the target with this blue arrow, and we are getting there. I was analyzing this last week, and I still keep my bullish scenario valid as long as 109.88 is hit, or the level of 107.04 is clearly violated. As long as none of this level is hit or violated, we are going up on the US dollar to Japanese yen. And the last one, US dollar to the Canadian dollar. As you can see, the long-term trend is down, but we got very interesting reversal recently. Those two candles are telling us there was a bullish pressure from the lows of 1.2468. For now, we are consolidating, as you can see, between 1.2591 and the highs of 1.2748. But if we will break out of this consolidation towards 1.2782, that's a very, very good indication of a possible market up move and continuation of this bounce. This bounce is 1.2746. By the way, we are going to do some price range anyway. So from here to, let's say, here, there is 2.3%, 278 pips. So that's a very nice bounce here. And if we assume that this is the low of the corrective retracement here, we have our ABC pattern. So what we see is either ABC or 1, 2, 3, 4, 5. We don't know that yet because there isn't enough candles here. So we should break above 1.2782 and go around the level of 1.2875. So that's our first target, 2782, and then the second target is stop for the wave C, somewhere around here. Let me do the extensions. You will see if there is something interesting from the Fibonacci point of view. Of course there is. 100 is 128, 1.2860, 64, 1.2875 or 80. This is the zone for the wave C 1-to-1 correction. And if we will see some kind of a reversal from this level, that means we have ABC correction to the upside, counter trend correction. But if there is some sort of the consolidation and then up move, then instead of ABC we're gonna have 1, 2, 3, 4, 5 impulsive wave to the upside, which change the outlook for the US dollar to the Canadian dollar pair, because that might be the first wave of possible trend reversal, just as we have it on the US dollar to the Japanese yen. And let's just take a look at the US dollar index. As you can see, we are trending just as expected in our bullish scenario to the upside. We are still in a up cycle. Wave 3 is in progress. We are waiting for the wave 4. The invalidation level, we can just put it here. It's the level of the top of the wave 1, 91.38. As long as we trade above 91.38 right now, this is our key level. This is our key level. This is it. The blue arrow shows you that 91.38 is the key level on the US dollar index. As long as we trade above it, there are chances we are going towards 92.44 or even 92.77. That might even be the target for the wave 5. So we will see. So far so good. A little bit overbought conditions, 70 points hit, but that's the perfectly normal for the wave 3. We're gonna have some kind of a consolidation, possibly some sort of the narrow range trading in wave 4 correction. And if there is another wave to the upside, that means this is valid impulsive scenario for the US dollar index, and the top of the A, B and C irregular flat correction to the upside. Again, this is a counter trend correction in the US dollar index. It's not a beginning of the new uptrend on the US dollar index, unfortunately. I can't do much about it. So that's everything for me for today. Majors plus US dollar index analysis. Thank you very much for watching this short video, and I hope I see you guys tomorrow with more news and more pairs to analyze. So take care and bye bye.